Hello everybody, it's that time of the month again, of course, which means it is a time for my favorite series on the channel, which is the portfolio updates that I do every month, where I openly and transparently show my portfolio's performance, my current buys, my current sells, my dividends for the month, and so much more. This is an amazing way for me in 20 years to look back and see how my portfolio and investing strategies changed over the years. Just to look back and already a few years ago and see the kind of stocks that I was buying now, it's really awesome to see and document my progress. This month my portfolio hit a new all-time high. I sold out of some stocks and I bought some new stocks. In the investing community, the most notable thing that's happened really this month is the passing of legendary investor Charlie Munger. Personally, my favorite thing about Charlie was whenever he would shit on cryptocurrency, and I'm sure when crypto and all the other yield max ETFs crash, he'll be smiling from heaven. With all that out of the way, make sure to check out the Do Dividend Stocks Not Drugs merchandise if you haven't already. We have a 15% off sale through Christmas, so if you were thinking of getting anything, now's the perfect time for you or any investor in the family. With all that out of the way, roll the Christmas intro.
Here comes Santa Claus, right down Santa Claus.
Please, it's too much winning.
Hello, I like money.
I think the most notable thing in the portfolio that happened this month is for the first time we crossed the $20,000 mark in portfolio value, so next we have $25,000 to get to. But this happened very quickly, and it just shows how fast market sentiment can change. There were a lot of companies a few months ago that were being punished for their rather slow growth or just not being the best of the best stocks. Now, those stocks are back up and everybody wants back in. With that said though, I have been doing a lot of trimming recently when getting my portfolio more quality and lean. Currently my portfolio value is sitting at $20,550.38. Out of that, $517 is just being stored in cash right now in the portfolio as I wait for better opportunities. This month, I really didn't see anything that popped out of the mind that's of crazy value or anything. The only stock that I could say that I think is getting quite attractive is Kroger. Over the last month, my portfolio value has rose over $1,300 from the last portfolio update being at $19,250. This is insane, and it just shows how fast bull markets can really happen. With that said though, I want to use this to my advantage. This month, as you'll see in my buys and sells segment, I sold out of some stocks that I've been looking to get out of for a while. I think something that I've struggled with in the past is buying stocks during bull markets and when stocks are overpriced. It's very easy to be enthusiastic about stocks whenever they go up. It's important to keep in mind a core principle of mine is not trying to time the market and to buy through the good times and the bad, so I'm just being a lot more picky with the stocks that I am buying. So right now, mainly, I'm just being patient. I'm being a hands-off investor, which is sometimes the hardest thing to do for investors, especially when you're sometimes just wake up like me and it's like, I'm going to invest today, I'm going to buy something, no matter what the price is really. I almost bought Costco last week at $595 and I didn't go through with it, as I know that it could probably fall back down and it's crazy overpriced as it is. Alright, to start off, let's go to the buys and sells segment. For this month, as I mentioned, it wasn't as hectic as the months before in September and October, as I didn't see anything crazy on sale or anything crazy appealing that I look to add to anymore in my portfolio. To start off, I put $25 in the Target at $112.45, and I put another $25 in the Target at $106.74. This paid off very fast. This paid off surprisingly fast, as just a week later, Target reported earnings and their stock traded up nearly 20%. So this just goes to another knowledge. Don't try to time the bottom. Buy stocks when they're overall on a large long-term discount, you think, and you still have a good sentiment on the company and you have a great thesis. This brings me into my next point, and lesson that I've learned is trying not to buy into other investors' sentiment and thesis on certain stocks. If you have a strong thesis, you've really done your due diligence, your research, and you have a strong genuine belief that a company is going to recover and thrive in the long term, especially when things go wrong in the short term, don't listen to what other people have to say. People could say Costco is the better stock, Target sucks, theft is an issue, they're never going to recover, they went woke. I'm right, you're wrong, basically. I will admit that Target is not the highest quality company in the world or even in my portfolio, but I think it's a good company trading at a poor company's price. Now, I'm not typically a value-oriented investor, as some other YouTubers may be, but at the same time, I think Target still has some growth ahead of it. I think it's a very strong business. You actually go to Target and you see that their stores are packed, and you see in the short term that they've been dealing with some issues, and obviously it's been paying off as holiday sales have been booming recently in the United States. With Target right now in my portfolio, I'm just being rewarded with being patient. I'm still investing, and I'm still bullish on Target for the long term. Will it ever go back to the 112, 106 prices? I guess we'll never know. Will it ever go back to 225? I guess we'll never know. Long term, though, hopefully, I still do have a great thesis on Target, and it's been even strengthened by this holiday season and their little boom that they've had recently. I made a video going over Target earnings, and I'd recommend you check it out if you do own the stock, but the one thing that I didn't see from Target that I would have liked to see, especially at these really low prices, were more share buybacks. They didn't even buy back any shares recently in this quarter. Now, this could be because of the capital expenditures that they're doing or the temporary theft losses that they have, but that's something that they've long-term done with their business, and then I'm hoping they reinstate this next transaction. It happened most recently this week, and you know if you join the Discord, link in the description, that I did this and that I've been eyeing it for a while. But I sold 1/2 out of my stake at UPS at $153. I was down about 6% on this position from the initial share that I bought. Now, UPS is a company in my portfolio that's in a really awkward position. It's a company that I don't think is horrible whatsoever. They have a really good share buyback program, and they have a really aggressively growing dividend, but it's not a company that I could particularly see myself adding to at the same time. So UPS rallied back this week after the bull market overall, and I saw now is a good time to particularly exit out of half of my position. Now, if UPS starts climbing back up into the 160s, 170s, I'll probably sell my other half of UPS. Unfortunately, it's just a company that I don't really see myself adding to in the first place. I can't really find my original investing thesis. It's one of the older stocks in my portfolio, but I definitely do think that long term, if you understand UPS's business, you have good thesis on it and sentiment, I think it's worth holding. But for someone like me, as young as I am, the time frame that I have, it just doesn't meet all those requirements that I could have in other stocks in my portfolio. It doesn't have crazy pricing power. It's impacted a lot by inflation and other economics. So, UPS, I'm sorry, thank you for serving its purpose. Now, with that capital from UPS, I put $50 into Vici at $29.61. I get back some of that dividend yield that I lost on it, and I think Vici is still relatively undervalued. I've been adding a lot to Vici as of recently, and I think my next dividend from them in January is going to be giant. Make sure to subscribe and turn on post notifications to see that. And then I put $50 into Starbucks at $100.30. Now, I think this is a fair price for Starbucks, and I'm definitely not against adding to an amazing business at a fair price. I think, though, if their China growth actually goes through, Starbucks is fair priced at around $120 to $130. Starbucks is a core holding in my portfolio, and I plan to continue adding to it. This month was also a solid month for our dividends. Now, my dividends by monthly income has been fluctuating a lot as of recently. I've been kind of trimming and buying and selling out of some certain companies that pay in certain months. To start the month off, we got $4.22 from realty, not reality income, and I reinvested that back at $52.87, which I thought is a decent price. With realty income, it's not a bad REIT whatsoever, but I do think there is limited growth ahead of it, though I haven't been adding to it like crazy recently. Instead, I've just been reinvesting that dividend and let that kind of snowball itself. Then I got $10.16 from AbbVie, which I reinvested back at a really solid price at $138.52. AbbVie is a company that I just have a little bit of concerns about, mainly because of the circle of competency with them. It's really not a bad company when you look at them financially, dividend-wise, and whatever, but it's just more of a circle of competency thing for me with AbbVie. So with AbbVie right now, I'm just holding and reinvesting my dividends. Next, I got a whopping 34 cents from Costco, and I went straight to the bank with that one, and I reinvested that. Next, we got another whopping $2.19 from Apple, which we reinvested back at $189. Happy to do that. And then we got $8.48 from Starbucks, which I reinvested back at $102. Happy to reinvest and just naturally compound my Starbucks position there. And lastly, for the month, I got $3.39 from UPS, which I reinvested as they're kind of at a lower price right now, and maybe I could get some more gains if it goes back up. UPS is still quality enough in my portfolio to have me still reinvesting the dividend. This is my dividend income chart month over month, and you can just see it's kind of been a little inconsistent as I've been doing a lot of rebalancing, selling, and buying out of new positions that pay in certain months, as I mentioned. So hopefully, as I kind of settle down, establish my portfolio, my core holdings, we'll see more consistency in 2024. Now, when it comes to my dividend income by year chart, let's just say I've already broken the $385 that I got in 2022. Now, December is going to be a really big month for my dividends, and you'll have to see how much I get, so make sure to subscribe and turn on post notifications. But will I hit $500? Honest to God, I don't know. We'll have to see how SCHD pays and a few other companies. This year, I put a whole lot of money into the portfolio, and I put a whole lot of money into some lower yielding stocks, and I think my dividend income this year could have been a lot higher than what I had it at. But I'm looking forward to 2024 being a year of just adding to those core positions and making it consistent in my portfolio. I want to thank you all for making it to the end of the video. I'm very happy with how November went. I'm really excited to see how December goes. Once again, check out the Do Dividend Stocks Not Drugs merchandise if you haven't already. The links in the description, or you can see the tagged products below. Also, make sure to check out dividenddata.com. Use my link in the description. I get a part of it as an affiliate code, so I'd greatly appreciate that if you're looking for the best investing software on the market right now. Thank you all for watching, and of course, do dividend stocks, not drugs. Have a good one.